My name is Trey. Today we'll be having our first webinar of the semester on credit cards versus debit cards. As you know, we have a chat feature in this as well, so hopefully you get a chance to ask a few questions or pause me if I'm speaking too fast, or even ask me to crank up the volume if I'm speaking too low. All right, so we'll get started with this. Some of the things that we hope to accomplish within this webinar is make sure we understand the difference between debit and credit cards. We'll go over some of the pros and cons of using a debit card and a credit card, and some typical tips of using the cards as well. Okay, so we'll jump straight into the cards themselves. So within credit and debit cards, they typically look alike and they can be used in very identical ways. But there are some very important differences that we want to make sure we have and know so we can use them in our financial toolbox. Okay? Okay, so when spending in our debit cards, when spending on our debit cards, that means we're spending our money. We all know that. It comes directly from our checking account or whatever account it's associated with. And when used properly, spending on our cards is just a straight strategy for budgeting and staying out of unplanned debt. So that's one of the good features that we want to keep out there. For debit cards also, they have no minimum, which are fees, or no annual charges. They have no interest. You're not borrowing any money, so there's no APR on the card. They're accepted at many locations. So prime example is your Visa debit card. Visa has made it easy to partner up with different banks such as Wells Fargo, Chase, Citibank, and other national banks, and even credit unions in some situations where they'll be accepted at all locations or mostly all locations. I know prime example for credit cards, they might not be accepted at different locations. So we want to keep that in mind also when trying to identify what the differences are. And of course, we bring that back. You use your own money. You're using your own funds. And there's no borrowing when you're in your debit card, when you're using your debit card, unless you want to overdraft on your account. And of course, you're going to be fined. You're going to be penalized $25 to $35 in some situations for just borrowing, even if it was $2 under your account balance. So keep that in mind also. And also, debit cards help you have a better understanding of your financial picture by setting up your budget. Okay? Okay. So we want to talk about one of the great strategies is the golden strategy. And this is a good strategy to use with your debit card for everyday purchases. And then you might want to use your credit card for internet or mail order purchases. So that's to make sure there's no fraud or anything of those natures. Okay? Because it's easy to get a hold to your Visa check card and use all of your money up in case something happens online or you put in 2 orders, and then to have it on your credit card and then be able to fight that off with your credit card company. And at the end of the day, you want to make sure within this golden strategy that you're paying off your credit card balance to avoid any interest charges. So this strategy really sets you up to utilize both the debit card and the credit card for what they were made for. And that's definitely to make sure you're able to purchase something right now and use it right now and pay for it at a later time. But remember, we want to pay for it as soon as possible so we won't have any interest charges. Okay. So let's move on to credit cards. So when we're spending with a credit card, that means we're spending money we don't have. It's basically a loan. Yeah. we're borrowing money. If we're not borrowing from our credit cards, we're probably borrowing it from our parents. But most of the time, it's in the form of a card. So many people use credit cards to pay off their balance each month in full. So they use their credit card and then they pay off what they owe to their credit card, to their bank, or whoever else they have the credit card with. So with that, they won't have any fees or interest associated with that. So they're basically using the credit card for free. And that's what we want to be able to do while we're using credit card. Use it similar to a debit card, but remember, we're building our credit as well. And we'll talk about that in the upcoming slides also. So, and other people carry a balance from month to month, meaning that they're paying interest on the money they have already spent and could be charged a fee for missing a payment. So it's a little more risky when you're carrying a balance month to month because, of course, you're already being charged, and then what happens if you miss that payment? Okay? So keep that in mind. Now, if there's not enough money in your checking account to make a purchase, this is one quote I like to live by. If there's no money in my checking account, then why make a purchase on my credit card? You know, if you don't have the money to be sure that you're going to be able to pay for it at the end of the month, then you really need to, you know, look into other ways you can finance that, or maybe you can not purchase those, you know, shoes or whatever else that you needed to purchase at that time. So reconsider that option. Okay. So do we have any questions at this point?
Trey, I'm looking in the chat, and there's currently no questions at this time. But feel free to please put your questions in the chat room. As soon as we get a chance, we'll go ahead and make sure we answer all your questions. Remember that this is only a 30-minute webinar, and so we want to make sure we maximize the time. But no questions at this time, Trey.
Okay, thank you. Okay, so let's dive a little deeper into credit cards. I know we tend to have our own idea of what we think a credit card is, but in all reality, credit card companies are making a lot of money off of us. And as you can see from this slide here, the annual percentage rate. Do we all know what the APR is? That's how often we're going to be charged the interest on our cards. So as you can see, it says, depending on your credit worthiness, it'll be anywhere from 9% to 13%. And for college students, the average right now is going for about 22% for interest rates on credit cards for college students. So this example here is really good interest rate. But as you can see, those are just introduction rates. Below it says after that, your APR, which is your interest rate, will go up to 14.99, which is 15% interest rate. Okay? So we know what the interest rate is, and that's calculated accordingly by the daily balance method. You can look more into that, but they get how much balance you have throughout the month, and then you go from there as far as how you need to calculate it with your interest rate. Okay? So the APR for balance transfers. Let's see who knows what a balance transfer is. Does anybody know what a balance transfer is? Within balance transfers, those are when you have a credit card and you just open it up and you say, well, I have another credit card and it currently has 28% interest, and this credit card is 15% interest. Well, let's see, maybe I can transfer the amount from this card to my new card. So that's when you transfer your balance from one credit card to the next. Sometimes there's a fee associated with it, as well as a higher interest rate. So you want to keep that in mind also. But sometimes it might be getting you out of a pickle if you had a higher interest rate on your other card, which can be sometimes 28%, 22%. So that's a great thing. You can save on interest, but you have to calculate how much you're going to be paying in new interest on this new card and how much you're going to be paying in the fee that they want for it as well. Okay. Then we go on to the penalty APR. So this is if you make a late payment, you go over the credit limit, and the credit limit is the amount of money that the bank has authorized to give you. And within the credit limit, you want to make sure that it's only between 20 or 30% of what you're spending on any particular time. Okay? So if they gave you $1,000 and said, here's your credit card for $1,000, your credit report and your credit score will begin to be impacted if it's higher than 30 to 40%. So my suggested rate of how much you should use on the card at any particular time is 20 to 30%. So if you got a $1,000 card, that means anywhere from $200 to $300. Okay? So keep that in mind also. Now we move on, and I wanted to talk about some of the fees. Of course, they have all sorts of different fees, credit cards out there. So, of course, they start with, we have an annual fee and everything else is free. Well, some cards don't even have an annual fee, and that's a great thing. So what you want to focus on is making sure your account doesn't have fees, and those are some of the questions that you might want to ask when considering a credit card. So there's some annual fees for American Express can get as high as $500 a year, $1,000 a year, and I would not even consider some of those things. And most people say, well, it has benefits. Well, it depends on how often are you going to be able to use those benefits. How often are you using the card, right? If you have a $1,000 limit and you only can use $200 or $300 at one time, then how often are you going to be able to get that percentage right? You know, so if you're paying $500 in fees for a $1,000 limit, as well as you're not going to be getting what 1% or 2% cash back or flight miles, it won't be worth it at the end of the year. So consider those and do the equations, work out the scenario, and see if it's feasible for you. Okay. They also sometimes charge you setup fees and other fees out there as well. So keep those in mind also when considering if you want to open a credit card, anything like that. Okay. Transaction fees. Prime example is if you're out of the state, if you're out of the country, call and see if your card is going to be accepted out of the state. There's foreign transaction fees. So they're going to give you this information once you sign all the documents and before you sign all the documents, so you can go over this and see what hidden fees do they have. It does seem like a lot, but once you highlight and you read it and go over it for yourself, you'll know what to do and what not to do. Prime example, if I'm going out of the country, I'm going to bring cash. So I'm not going to focus on credit cards because it might be a 2%, for each transaction in our U.S. dollar. So keep that in mind. And then there are penalty fees, as I talked about earlier. So there's a lot of fees associated with credit cards, and it does seem like a lot and it can be overwhelming, but credit cards are, like I said at the beginning, if you use them right, you can be sure to avoid most of these fees, or even all of these fees, when using such a tool in your financial toolbox. Okay, so I see a question, and it says, what if you're late? What if you're laid off and all your payments are now on your credit card, and it's way over your allowance? Okay, so his question is more related to his budget and how he's going to be able to afford his credit card payment after being laid off or not working. I would suggest calling your credit card company and telling them what's going on in your life. Most situations, they give you the opportunity to say, hey, we can postpone it, or we can take $10 this month, or, and you give them a timeline of what might work for you. So that's the first option. The second option is to definitely keep it down at 20 to 30%, because at any given time, you'll have, $20 to $25 every month to pay the minimum that your credit card is asking for. So keep that in mind. Okay? Hopefully that answers your question. Okay, so how many in avoiding fees? Well, my suggestion is 2 credit cards. Of course, some of us have more. We're in college. The average is definitely higher than 2. It's around 4. But I think we should focus on just 2. I know prime example is I got one when I was younger, first few years of college, and it was a higher interest rate. It was a higher interest rate because I'm new to borrowing. That's the first reason. The second reason is because they don't know how much, I wasn't making a lot of money. So definitely they gave me a card with a high interest rate, and for that, we just have to make sure we pay our bills on time, keep make sure we're not paying the interest, which means we're paying in full each month. And then after that, a few years of success, we make sure, okay, well, maybe it's time to get another card. One thing you want to consider is a low interest rate, okay? And that brings up another question as well, is which one to pay for first. So if you have credit cards right now, do you pay for the higher balance, or do you pay for the higher interest or the lower interest, or you pay off the one that has the lowest balance? Well, it's really up to you. But I can give you 2 scenarios where I would pay off the higher interest first, because you're paying the bank more money. Now, if that was the higher interest and it had a lower amount, then I would focus on the low interest with the higher amount. So it really depends on how much money is on those cards, okay? But if they had both the same, I would definitely consider paying off the higher interest, because I don't want to give away money. And then I would focus on the next card, which has the lower amount, because I want to feel some sort of gratitude and some sort of success in my financial budget that I can, carry on and continue to pay for my other bills. And it feels good to finally have that burden off your back that you've paid off a bill. Okay? So some of the benefits with a credit card is fraud protection, which is similar to your debit card in a way. But with credit cards, it takes it to another level. And they passed an act quite a few years ago to protect you for that reason with credit cards. Okay? So keep that in mind when something pops up on your credit card and say, well, I didn't make this charge, then you want to make sure you're checking what does that mean. Okay? And you're checking your statements every month. Okay, I see another question, and it says, is it better to take loans and pay off your credit and slowly pay off your loan because we still get time as being undergraduate students? Okay, this one can either make you, work harder and pay off that loan, or it can get you further in debt. Because if you're not going to focus on paying down the credit cards or paying down your credit lines with that loan, and then you're not comfortable cutting up that card afterwards, then as an undergraduate student, most likely you'll be spending or putting more money on that credit card even though you paid it off. Okay, so you have to have a lot of discipline to be able to do something like that. But it's doable, especially if it's a subsidized loan and the interest doesn't start, and then you can still start to pay off that loan back to the university or back to the other financial institution while you're still in school. Okay, so that's something you might want to consider. But like I said, you have to have a lot of discipline And also you want to be sure that you're not going to put the same amount, or you're not going to put a large balance on your credit card. And remember, emergencies come, and that's what we want to make sure our credit cards are used for, either emergencies or we're paying off the balance each month. Okay? I hope that answers your question. Now, to go over a few more credit card benefits, like I said, you can dispute different settlements on your credit card. Somebody stole it, and it helps you build your credit. Of course, this is one of the main things that helps build your credit and goes directly on your credit report. And it provides perks. Some of those perks are cash back. Some of the perks are mileage that you can fly, different things like that. But you want to evaluate which perks work for you. Prime example is, I know I'm not going to be getting any vacation soon, so why do I need a flight? I need the cash back, and then I can pay down my debt even further. Do you feel? Okay. So, and then the last thing is the ability to cope with emergencies. So that's one thing that we want to definitely stay focused with is focusing on emergencies. Okay. Here are some of the questions that you might want to ask when considering a credit card. Is what's the credit limit? What's the APR? What's the annual percentage rate, which is the interest rate? Okay. How widely accepted is the card? If it's Amex, then it's not going to be accepted everywhere, right? If it's Amex, which is American Express, it might not be accepted at all merchants. Other questions you might want to ask is, what services does it have? Some services even give you a certain period of time to try out that new product and send it back. Or in case that product has a defect, you can send it back. I know a lot of cards have some cool features like that. Okay? And other features like fraud protection, credit card, credit monitoring. So look those up and be sure to go in with a better understanding of the questions you want to ask when considering a credit card. You want to understand, what is your grace period? What if you don't pay your credit card? How many days do you have until they say we're going to report it to the credit bureaus, right? So stay focused on these questions, because sometimes it's a 5-day grace period, sometimes it's a 10-day grace period, sometimes there's no grace period. But if you understand, you'll have a little extra room to work with. And in some situations, you can definitely ask them, hey, can I change my payment date? That might work with you and the day that you get paid. So that's another option as well, that you can call the bank or the company to work that out. Okay. Ask them, are there any annual fees? Will they have any fees associated with their cards, with their account, with the services? Ask them about all the fees, all the different fees, because it's important to you that you know what you're getting yourself into. Okay. And if there's any transaction fees, right? A lot of gas places, and now they start charging 35 cents or 10 cents higher in gas because you're using your credit card or you're using your debit card. And that might be an instance where you want to go to the bank and pull out cash to go to the gas station. Okay? The last thing we really want to focus on is the major importance of your credit report and your credit scores, right? So here are the websites, and I hope you all take advantage of this because they are free. These are free resources out there for you that the government makes available. The first one the government makes available to you because you need to know where your credit stands, and if the right people, the right merchants have been reporting to your credit report and to the credit agencies. Okay? So that's the free annual credit report. This is not freecreditreport.com. This is annualcreditreport.com. which is powered through the three credit bureaus. Okay? And that's annualcreditreport.com again. And then we have your free credit score. So of course we need to know our credit score, which can range anywhere from 350 to 850. We have that being creditkarma.com. Credit and karma is with a K.com. So these are some great resources out there that you can do right now. You can do this one online and have it mailed to you for your credit report. You actually get 3 opportunities throughout the year, so 1 from each credit bureau. And normally I get 1 every 4 months, so I can keep an eye on my credit, so I can know what's going on. Because if I don't know what's going on, then when I apply for a new credit card or when I apply for a house, then if something comes up, then that's going to delay my price. It's going to increase my price, as well as delay me getting that, that home or that car or that new credit card. Okay? And if you have a better understanding of where your credit score is, you will definitely know, hey, I know my credit score. I'm going into the bank and telling them, hey, I have a 780. What can I get with a 780? Instead of them pulling your report, right? Similar companies like T-Mobile and other phone providers now try to pull your report as well. So if you have a better understanding of if you'll qualify, then that's something you might want to do also. Now, the cool thing also that we want to stay focused on is we will be talking more about your credit report and your credit score at our credit workshop. So be sure it should be on our website. It is on our website, and it's called The Importance of Credit. So make sure you get a chance to go out, to go to that workshop, which will be in Juniper Hall 4117. Okay? And for our last slide is to just make sure you contact us with any questions or concerns, or if you even want to set up an appointment with us one-on-one to go over your credit report, to go over your credit score. And I see another question here. It says, what's the difference? And I'm thinking you're asking what's the difference between the different credit bureaus. There's not too much of a difference, but there's different companies for different things. So prime example is there's one, TransUnion, Equifax, and Experian. Those are the 3 major credit bureaus. But you can't just trust one company with relaying information about your credit history. Some companies use Experian to pull your credit report, and some employers even use TransUnion to pull your credit report to see if you're going to be a reliable candidate for employment. So there are 3 different companies, and for that reason, they make sure that you have access to each one of those. Okay? So are there any other questions, or did I miss any questions before we leave? We have about 2 more minutes.
I've been keeping up with the questions, and there are a few questions that I'd like to ask that I got from the chat room. The first question is, how do we check what our current APR is?
For your current APR, you can check your statement, your credit card statement, or you can even call the number on the back of your card, or you can even walk into the bank and say, hey, what's my APR? What's my interest rate on my credit card? And they'll look it up in their system and they'll be able to tell you. So that's a cool feature as well of having them. You can try to negotiate for a lower APR, but most likely they're going to keep that one where it's at. So in the future, just build up your credit and apply for a new credit card at a later time. Remember, don't apply for too many because it can start to impact your credit report and your credit score. They'll think you're just trying to be greedy and you just want to spend a lot of money. Okay? So are there any other questions?
There was 3 more questions. Another question was, I thought that keeping my payments keeping up on my payments was good for a good FICO score, but now I'm learning that I may have to stay under 35% on my credit card balance. Is that correct?
That is exactly right. So seems like you're on a good track. So if you're keeping up your payments and you have a balance on that card, then that's okay too. But remember, you're going to be paying that interest. Sometimes it costs to build a good credit report and a good credit score. So keep that in mind also. But you're at a good area, so start to pay a little more on that card so you can get it down to at least 40%. Because remember, when it starts going past 50, 60, 70, it begins to get unmanageable, as well as the credit agencies start to look at you and say, well, this person doesn't really know how to manage their credit report or their credit cards. Okay? And what was the next question?
And two more questions. Yes, the next question is, in one of your slides, you showed two websites, annualcreditreport.com and Credit Karma. What is the one difference between both? Why would I go to each one?
The difference between both is you have two different things that are related to credit. So you have your credit report, which is like a report card. It has the comments, of all your different merchants you've been with, your address changes, all your information that you have, and that's where you get that information from. Remember, the TransUnion, the Equifax, as well as the Experian. So those are those people, right? But there's also another feature and also another thing that companies keep in mind. They look at that, but they also look at your credit score. So that score is very important to them, because with that score, they put you into certain categories of how much interest they're going to charge you. How loyal have you been with your existing cards? And with that, they make sure that service is free to you as well. The Credit Karma website is a website not provided by the government, but it's more of a free website where you can go and get that information without paying for it, because the annual credit report does not provide it, only at a charge. And this website provides this information to you, but it might try to solicit credit card offers to you as well. So you make sure you know what offers you want. You make sure you know and understand what you qualify for, and really just use that service for what it really was intended to do, was to give you your credit score for free. Okay? Another question?
Okay, so since we reached our time, it's now 30 minutes past, we can keep the chat room open right after we sign off. So, because there are some questions that are coming in after, but I'm not sure if you have any final thoughts before we go ahead and close it.
Okay. Well, that's all I have for you all today. Be sure to email me. I'll stay a little after, so you'll hear my voice. We'll just stop recording. And thank you very much for showing up and showing out at this webinar.